What's good, everybody? It's your boy Christian with Good Eats FX, back with another video. Feeling hot. Let's hop right into the charts. All right, what's going on, everybody? So here we are on the charts. This is the dollar index. Why are we even marking the dollar index? Well, if you trade majors such as Euro USD, GBP USD, Aussie dollar, USD JPY, USD CAD, NZD USD, all of those majors correlate with the Dixie. What does that mean? Very simply put, here's the sauce. If you're trading a USD XXX pair, such as USD JPY, it will more than often than not follow the price action that the Dixie's doing. Okay? Vice versa, if you are trading something like Euro USD, which is a XXX USD pair, it will do the opposite more than likely that the USD is doing, the Dixie's doing. Okay, so simply put, you know, it's not a holy grail thing that you're just going to trade opposite all the time. You still need to read price action, follow break of structure, but the point is the Dixie allows us to have a confluence in price action when we're trading. Now, the point of this video is very, very simple. You don't want to mark your chart like this. Now, you might be saying, hey, Christian, this chart looks really well marked. You had a great narrative and price showing here. Like, why would you not want this when you're reading price? Well, I'll tell you one thing. It's precisely just that, a narrative to current price action. All of this stuff will congest your mind and make you doubt your trade setup. You only need to do this when you're getting ready for the week. And you don't even need to do it just like I do. This is what I do. I read price through the narrative, okay, on the monthly time frame. Major swing low, comes up, makes equal highs, price pulls down, breaks structure here, creates a higher low. I put a trend line here, not because I trade trend lines, but just to make a point. This is a retail thing that we like to see a lot of the time. We like to see a bounce in the trend line. Well, this was a break and a retest, but it made equal highs. The real break of structure was when these equal highs were taken. That was the swing point that broke structure. From there on, this swing low here actually went to the major swing high, taking out all of this liquidity. This was all external liquidity was taken. Now this major swing high, the moment it got to this swing low right here, it breaks structure, correct? And that is the liquidity that was taken, equal lows. Pulls up, sells down, breaks structure. Every circle is a break of structure. So just from this major swing high all the way down to here, we broke major structure. Now why is this a green box and this is a red box? Well, these equal lows here were major. Why? Because if price broke this low, this was coming. They were coming to take this money here. And that's precisely what they did. They pulled back, right? Took out the internal liquidity and then sold down. And that's why I wrote here, major swing low break of structure. Okay? So now, the only thing you need to recognize is from this swing low to this swing high. I would even say that this is our new dealing range that we're currently looking at price on the monthly time frame. It's from here to here. What I like to do is to find the 50% of that range. So if we take from this low to this high, where is the 50%? It is right just about here, 50%. Boom. All right, we're going to get rid of everything else. Get rid of this. Now, why do I write the 50%? Because look at how price is trading below the 50%. That means we're in a discount in price. We took out a low. We can expect a pullback. Now, what happened? Did we get a pullback to continue to the downside? No, we did not. We got a swing high, failed to take out high, swing low, took out internal liquidity. Boom, came up, so it failed, made a lower high, came back down, ran the liquidity, and made a higher low. This right here is another example of your break and retest. It's more of a smart money way to look at it, okay? I'm trying to break it down. Very simple, keeping it simple with Good Eats FX, all right, guys? So, price comes up, generates more, what? Equal highs. Now look, check this out right here. This swing low right here generated liquidity below price. But did price break it? No. This is something you would have to watch out when you're trading live price action. You can't just assume. You have to wait for confluences to add up and to get a confirmation. Well, once price broke this structure, it actually gave you a pullback on this candle right here. Now we are talking monthly time frame, okay? So let's not act like you would have caught that in a second. I'm trying to point out this right here. I'll use an arrow tool. So this was a pullback on the monthly time frame back into what? Into where the liquidity was taken. So I would have waited, me personally would have waited for this to happen if I was trading this time frame. And that's in a whole nother video. Okay. Now, so far the narrative is what? We are bullish on the monthly here. We are bullish overall in a downtrend bearish market here. Okay. We are trying to get to this point. Well, guess what? Price broke structure right here. and here. Took that out, generated equal highs, and the money was here. We were looking to get up here. Price came up here, capped out, ran what? The internal liquidity again. Are you guys starting to get the story here? You see how it works? Price will always generate equal highs and equal lows, and above and below rests liquidity. And that is what you're targeting, liquidity. Okay, to get a confirmed break of structure, you need to see a candle body close as such right here. Let's zoom in very close, okay? We don't want to do that. We want to pull up. All right, cool. Let's zoom in very close. So look at this. You see how right here is the significant swing point here? All this. You see how this didn't close a candle body, but it pulls back up into this inefficiency in price. Let me go ahead and put a box here. So from this wick to this wick, this is what ICT would call a fair value gap. It pulls right into that and trades lower, taking out liquidity, okay? This is a confirmed break of structure, this candle right here. At this point, when it makes a swing low and then it comes back up here and takes out this liquidity, you have yourself a continuation to the upside. All right, let's zoom back out. So far, we're just going through the narrative on the monthly time frame. Price comes up here, makes a lower high, takes out this liquidity, but then drops, makes a swing low, and boom, we are in current price. So do we need all of this on the chart now? No, we don't. We really, really don't. So let's get down to the daily time frame. Let's talk about the daily, because the daily as a day trader is what you want to focus on. So you see that this is this low, a higher low here. Swing low, swing high, boom. So our dealing range on the daily time frame is going to be from what I just said, the swing low here to the swing high. All right, and the 50% of that range is what we are going to use as equilibrium. Okay, so there's the 50%. It is right smack dab in the same spot that we put on the monthly. So we're in good shape. Okay, everything's good. So now I would suggest that you organize your object tree as such. Okay, I put the breaks of structure. We don't need that anymore. We don't need the swing points. Okay, we don't need the liquidity anymore. All we need is the relative price action. Okay, and that's it. So looking at the daily, now you want to zoom into the daily, because this is where it's at right now. Okay, this is what you're looking at. You're looking at this. Okay, and look at how the daily closed recently. We broke structure right here. This is a break of structure. Bam, son, break of structure. Look at that, clean, and it closed as such. You know, like this. So you have to consider what is the Dixie looking to do? It's looking to take out this low. All right, this is the next break of structure right here. And if that low is taken, well, we want to go out and take this low, and this will break the trend line. And you know what we'd be, guys? We'd be in candy land. Why do I call it candy land? Because look at all the liquidity below here. All right, look at all of that liquidity. All of that is coming for it. It's coming for it. All right, the trend lines are just for that. Okay, we just use them to just target liquidity. Sometimes I like to know what retail is doing, so I know what not to do. Okay, kind of go against the herd. Now, this right here is a point of interest. Why? Because if price takes out these equal highs right here, let's go ahead and mark them. Let's see if you can catch them before I do. Dang, you guys are good, man. You already caught it, didn't you? Here's the equal highs right here. All right, cool. So what am I going to put here? I'm not going to put an X. I'm going to put a money sign. Why? Because this liquidity is waiting to be taken. If that's what they're going to do, if they want to push the upside, they can. Does that make them bullish? No, they would need to take out this area. That's why it's a point of interest. They would need to break structure. You need to watch out for those breaks of structure. Okay. Now, what else would you be marking on the daily? Well, there's an inefficiency in price from here to here. ICT would call this a fair value gap. Okay. So there's also fair value gap. I do not leave these marks on my chart. Okay, but you can go down in the 1 hour and you just wait. You wait for price to show you what it wants to do. This is a break of structure. You already know that. Look, we're trying to get to here, so you know that this is the area of interest. I would go ahead and if you wanted to go ahead and do something like that, it's going to be broken immediately. So I don't do the trend lines. They're too subjective. Just wait for price to print. If it's going to go down, more than likely you'll see it pull up first. All right, and that's it. That's all you want to have on your chart. Your point of interest and what your entry trigger is going to do. Okay, when you get to that area and price rejects this high, makes a swing low, pulls back up, you could sell it. Simple as that. All right, guys. So I hope you got something out of this video. If you want to get more in depth about breaks of structure and you want to understand more about what I'm talking about when I say equal highs, liquidity, dealing ranges, and all those things, check out my last video. I'll pop it up right here. I did a full top-down analysis on gold from monthly all the way down to the intraday time frames, and you can learn everything that needs to be taught in regards to breaks of structure and liquidity. All right, my name is Christian. I hope to see you guys soon back at Good Eats FX.